Hello everyone, welcome to this price action and trade breakdown in NQ and ES. In this breakdown, I'm going to walk you through the price action from last week on both NQ and ES. I'll dissect exactly what happened, how you could have navigated through the price action, and what the valid trade opportunities were based on the drawn liquidity that I had provided you last week and the market context that we had. And after that, you can compare your own executions against this and see whether your performance was aligned or if there were any inconsistency in your trading decisions. Now, as you already know, I had provided you with the drawn liquidity and the weekly outlook last week, right? So before we get into anything else, let's first of all revisit that drawn liquidity and let me break down the thought process behind it. So looking at the weekly time frame price action both on NQ and ES, what you can see right here is that we've got this kilo both on NQ and ES. And what ended up happening is that ES took out this low, whereas NQ failed to do so. And this created a clear divergence between these two assets, these two correlated assets. Now, even though my drawn liquidity on both of these two assets remain these lows right here, these corresponding lows, right? Even though this was my long-term drawn liquidity for both of these assets, because of this divergence, this gave me a short-term context that now we can first of all expect price to fill this internal range liquidity and retrace higher to fill this gap or this IRL before it starts continuing lower towards the long-term drawn liquidity. And let me say that again. So even though my long-term drawn liquidity was still lower, and the overall expectation remained bearish on this higher time frame, this divergence right here gave me a short-term context to expect a retracement first. And that's exactly what I mentioned last week in the outlook. I was expecting a short-term retracement higher on both of these assets to fill this internal range liquidity or this fair value gap, right, that is sitting above price on both NQ and ES before continuing lower towards the broader long-term drawn liquidity. And my directional bias for the week was bullish based on this context. So now that we've established the higher time frame drawn liquidity and directional bias, let's drop down to the forward time frame to go over the price action in more detail and more importantly, identify which setups were actually valid and high probability trades with full narrative and supporting structure and context behind it. So let's drop down. Looking at the 4 hour time frame price action, you can see that price opened up right here. And if we zoom in, you can see that immediately, obviously our drawn liquidity was higher. So you would have expected an expansion toward the drawn liquidity. And you can see that right away price formed this clear candle range around this order block, this 4 hour order block, right? And then during the London Open session, what happened is that we saw the purge of this candle range low on ES and we tested the order block, and from there price expanded cleanly towards the drawn liquidity. Now what made this trend valid wasn't just this candle range alone. There were multiple confluences here. This candle range formed at a key level, and the purge of this candle range happened at a key time during the London Open session. And that, not only those factors, but along with that, we also had an SMT divergence with NQ. If we zoom in right here, you can see that NQ failed to take out this candle range low. It tested this order block already, but NQ failed to take out this candle range low. Whereas on ES, we took out this low, which led to this divergence right here. Now, let me use this so we can see this more clearly. You can see that the supporting factors behind this trade idea were first of all this candle range. We had this key level, right? And this candle range and this key level made up the market context. And the narrative was that I was expecting an expansion straight away from here. And all of these supporting factors combined created this high probability trade setup, right? Now, even though I personally don't trade NQ and ES or ES, I only trade EU, but I was monitoring this setup closely and it played out exactly as I anticipated it. Now, you might be wondering, why did I expect an expansion straight away from here, and why didn't I expect a retracement before an expansion? And the answer to that is that I expected a direct expansion higher from this setup is because, first of all, we had this order block and we didn't had any liquidity resting below us. You can see that within this dealing range, we don't have any internal range liquidity or any fair value gaps or any value imbalances. This entire dealing range right here is already filled and it's already balanced, right? There's no internal range liquidity below, no unfilled gap, no inefficiency. So there was no reason for price to go lower because there was no liquidity resting below us. And the next logical move, and the only next logical move for price, was to target the dollar liquidity above. And the catalyst here were, first of all, this 4-hour order block and this candle range. And once we purged this candle range and tested the key level, and we had this narrative and market context behind us, price expanded cleanly towards the drawn liquidity. This was the first high probability trade that we had last week on NQ and ES. We had a strong market context and narrative behind us in the form of this 4-hour key level and this candle range, and the trade was clearly aligned with the high time frame directional bias and drawn liquidity. Now let's drop down to the 15-minute time frame and let's see how we would have taken an entry there. On the 15-minute time frame, you can clearly see that during the London Open session, price purged below this CRT. It also tested the key level in the form of the 4-hour order block, and it also manipulated below this Asian range low, which gave us a normal intraday protraction profile. And once that purge and this the test of the key level happened, the next step would be to wait for an order block to form, and it did right here. After price closed above this specific candle and this specific candle, it gave us a valid order block, and your entry would have been at the open of the order block with your stop loss below the order block with your target higher. It could have either been a dynamic target in the form of the candle range high, or you could have had a stated target or a fixed target. And from there you can see that once the order block was formed, price tested it, it expanded higher towards the target. This was the first high probability valid trade idea last week on NQ and ES. You can see there was a clear market context and narrative behind this trade, and it was aligned with the drawn liquidity. That's why it played out the way it did. Then on Tuesday, you can see that we didn't have any significant price action for the first half of the day. And then during the New Year session, we had this move lower. And with this move, we rejected below this low and tested this order block again. And the same thing happened on ES. But if we look at the Dow Jones chart or the YM chart, you would see that we had an SMT divergence again. You can see that NQ took out this low, but YM or Dow Jones failed to do so, which again led to another divergence. And along with this divergence, we also tested this 4-hour key level again, right? So this gave us another market context and narrative that now we can expand higher again from here. Right here, you can see that after taking out this ERL and this external range liquidity, we retraced lower again to fill this internal range liquidity in the form of this thing, this 4-hour key level or this order block. And along with that, we had this SMT divergence, this major SMT divergence with YM. And because of all of these supporting factors in this narrative, in this market context, you would have expected an expansion from here. And you can see along with that, all of this happened around this big bulky candle. And this would have been your candle range because all of this narrative and this market context played out around this candle, and after we had this big bulky candle move lower. So after this candle range had got purged, you would have dropped down to the lower time frame and looked for an entry towards the short-term drawn liquidity higher, and that would have been your bullish trade idea. And then on Wednesday, you can see that we opened up right here, and then based on previous day's price action and previous day's narrative and market context, you would have straight away expected higher price action towards the drawn liquidity. All of the internal linked liquidity had already been filled, and the only thing that was left, or the only logical move for price, was to now immediately expand higher towards the drawn liquidity. Then on Thursday, you would have had the same market context and narrative. Price opened up right here, and you can see it had already taken out this low, in internal range liquidity had been filled within this dealing range. So you would have straight away expected higher prices toward this drawn liquidity. Right here, you could have chosen this candle as your candle range, and it would have been a valid candle range because there is a strong market context and narrative behind it, and we also had this supporting key level in the form of this inverse value gap and this order block right here, right? And once it had got purged, you would have then looked for an entry higher, right? You would have dropped down to the 15-minute time frame, and here your anticipation or expectation for price would be to purge this candle range and then look for an order block confirmation entry towards the drawn liquidity. But obviously you can see price didn't play it out exactly as that, and instead it straight away went lower. But even then, you wouldn't have had taken a loss because your objective was to wait for an order block confirmation entry in the form of this right here. But you can see price did not form any confirmational entry, price didn't form any order block, so you would have been saved here. And even though price didn't expand it as you anticipated it or expected it to, you still stayed risk off and you were safe from this move because you are waiting for a confirmation, right? So even then here you still would have been neutral, right? You wouldn't have had any loss. And then from here, once this happened and your trade idea was invalidated, from there you could have just stayed risk off for the rest of the day. This is what you would have done on Thursday.